Review our trades for today. Today is Tuesday, September 12th of 2023. We did multiple trades in our main ops trading account and one in our small account. And we'll discuss the one that we did in our small account because it's the same one in our main account. We'll do that first. So we bought to close the CSX September 15th $30 put options. And in both accounts, the small one and the larger one here, we bought that for 5 cents per share. The difference is that we got paid a commission at Interactive Brokers and had to pay a commission, a small one, I believe, in our E-Trade account. So simply, the reason why we're getting out is just because CSX is supposed to announce earnings during this next cycle. So we'll look for them to get those earnings out of the way and then look to go back in with the new trade in CSX. Next one is GD. So we rolled this put option out and down. So we bought the GD September 15th 220 put and sold to open the November GD $210 put and then bought the 170 put just for some really out of the money protection. Pocket of 30 cents. So not much, but pocket $30 minus commission. Let's take a look at the chart here and you'll see why I did that. So general dynamics, it was looking good. It was in a nice uptrend on this daily chart. Even here on the weekly chart, we see that it had made a higher low, it had made a higher high, everything was looking great, broke out above the 50 moving average on the weekly chart, kind of coincided with this 200 moving average on this daily chart. However, about a week ago, it decided to start showing some weakness. And so because that we were at this 220 area right in here, because of that recent weakness, I decided to go ahead and just get it down, just to be safe, get it down and out. And so happy to get that done, and we'll see what happens between now and November. Unfortunately, it'll put us in the position through earnings most likely. So don't like that, but we're able to get it down, and then we'll see what happens over the next couple of months. Okay, and then the next position here, we bought to close the AMGN October 20th $215 put option for 27 cents. This position that had gone against us, we were able to roll it down for a decent credit several months back. And now that AMGN has had a nice advance, we're able to close this out early. So we're looking for it to come down. And I was about ready to pull a trigger here 4 days ago. It was like four trading days ago on last Wednesday, September 6th. But it rebounded so hard, we kind of missed that little small window of that one day. So we'll see what happens with it. It's finding resistance right here in this area, somewhere in the 265 to it's like 269 area. Kind of looking back at its history, we see that when it has a nice advance like it has over the past couple months, it tends to top out and just kind of hang out and then have a decline. So not saying that's definitely going to happen, but it seems like that's kind of its routine. It wouldn't surprise me at all for it to retrace back down here to the green 50 moving average, which notice over here on this daily chart, that put it right at the 200 moving average. So that's kind of what I was looking for a couple of days ago. So if they'll do that, then we'd love to go back into a position as long as earnings aren't in that next option expiration cycle. And finally, UNH, we bought to close the September 15th $490 put option, rolled it down by $10 and out to November by selling to open the UNH November 17th $480 put, and just bought the 320 put for a little bit of change, about a quarter there. So in all, we put 65 cents per share into our pocket, and we improved our strike price. So kind of like GD, we are in a position here that it had gone against us a little bit. It wasn't too bad. I mean, we were in the 490 put. So again, it was another one that it looked like it was finding support above this green 50 red 200 moving average on the daily chart, which also coincided with the green moving average on this weekly chart. Well, a couple weeks ago, it breached that, and then about a week and a half ago, a big down day, big volume. So I just had to go ahead and get that rolled down and rolled out just in case it continues to decline. Because from here, it's either going to find support here, and of course it could go up, or if that doesn't hold like it did back here in May, then we could see it decline down here to this 450 area. So we want to improve this if we can while we have the opportunity. So we're able to do that. Again, we had to go out to November to do that for a credit, but happy to get that down by $10 and still get a credit. And we'll see what happens with the position the next month or two. So that's all of our trades for today. We have several more we need to close out or let be assigned and switch to covered calls or do something with between now and Friday. So we got 3 more trading days before this main option expiration day in the month of September. So that's all for today. I hope you have a great evening.